A very good morning to all our viewers. You're joining us live on this broadcast of Moneycontrol. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all those news and cues that go on to impact your trading day. But can Nifty really climb that 22,500 levels? We are on FNO expiry day today, and the April series will come to an end. But that Nifty's journey upwards, does it really have enough support to be going on from there? We'll know in just a bit when markets open, but today is definitely one of those earnings heavy day. We are going to see the likes of Bajaj Finance, TechMahindra, ACC, and also reactions to companies that have put out their Q4 earnings like Axis Bank, HUL, LTI, Mindtree, and the rest. There's also going to be more stock specific action in terms of what Kotak Mahindra Bank has to say after RBI's curbs. So that's all that we're going to be talking about in the show. But before we get to all of those, let me take you through all the top headlines. Wall Street closed mixed as rising yields weigh in on equities, while Meta plunged by about 10% in extended trade on a weak guidance. The stocks in Asia Pacific have opened mixed, while the GIFT Nifty has also indicated a muted start for the Indian markets. And crude prices remain quite range bound, with Brent at around $87 a barrel as geopolitical worries ease. Gold remains a little unchanged around $2,300 an ounce ahead of the release of key economic data in the United States. RBI bars Kotak Mahindra Bank from onboarding any new customers through its digital platforms, also bars the bank from issuing new credit cards. RBI says the action follows continued failure to address concerns over the bank's IT system. Hindustan Unilever meets the muted estimates in its Q4 even as revenue and profits have declined. Axis Bank went on to beat estimates on all parameters in Q4. Profits have risen nearly 30%, whereas revenues are up by 17%. Margins seem to have expanded by 160 basis points, and asset quality has also improved. If you look at LTI Mindtree, that one has delivered a weak third quarter with revenue and margins coming in below estimates. Margins too have contracted sequentially. And in key earnings to watch today, you have IndusInd Bank, which is expected to report its slowest profit growth in 13 quarters. Bajaj Finance's net interest margins is also likely to contract in the fourth quarter. Nestle's volumes is likely to grow though between 4 to 6%, while margins are also likely to expand in this Q4. Well, we have all those stocks to be checking out and where they're going to be pushing the Nifty really. In 9 minutes from now, we'll know whether Nifty is headed towards those 22,500 levels. But let me also take you through all those FNO data cues and what they are really suggesting as per that monthly options data. Remember, today is the expiry. 22,500 strike was the one that owned the maximum call open interest of about 1.27 crore contacts. Well, it was the put side. The maximum open interest was seen at 22,000 strike, which acts as that key support level, we would say, for the Nifty. Now, if you have to look at the put call ratio for the Nifty, that one declined to about 1.04 versus the 1.06. So just a small decline, but that's still saying that people are selling more put calls in compared to the call strikes that we are seeing. Let me also tell you the FNO ban and which stocks have ended up there. We are seeing NSE add Aditya Birla Fashion and Retail as well as SAIL into the FNO ban list for April 25th, whereas it has gone on to retain Hindustan Copper into this ban list. The ones that have come out of the list is Vodafone Idea and Z Entertainment Enterprise. Remember, today is also Vodafone Idea's FPO that is going to, go on flows, and you are going to see whether you've got that allotment. At 11 rupees was the upper band put for that share. So we need to see how really, whether it opens at that premium and what traders really get. In terms of the fund flows, well, we did see foreign institutional investors selling shares worth about 2,511.74 crore rupees on yesterday, whereas it was the DIIs that did the heavy lifting. They went on to buy shares worth of 3,809.90 crores. This is the provisional data that is put out by NSE, really tells us. In terms of the VIX index, because that's the one that we had our eye on yesterday, that one managed to rebound, we would say, coming in by 0.78%, but closing in at that 10.28 levels. So this after that 20% fall that we saw in yesterday's trade. Now let's talk about the earnings that you need to be watching out for. Like I mentioned, Bajaj Finance, IndusInd Bank, Nestle, TechMahindra, Vedanta, ICICI, ACC Cement, all of them in that list today. So couple of big names that you need to be watching out for. You can also see on your screens there is the Vodafone FPO that I said that would go on grounds. There is the management that is addressing at this point. Kumar Mangalam Birla also, going to speak about the fact that Vodafone is actually out there. So listen in to what the management is saying.
I would now request Mr. Ravinder Thakur to present mementos on behalf of Vodafone Idea, and the first recipient I'd like to invite onto stage Shri Ashish Kumar Chauhan. And while Mr. Chauhan is making his way up onto stage, I'd like to ready the Managing Director and CEO Axis Capital, Mr. Atul Mehra. Mr. Mehra making his way up. Country Head India Jeffries, Mr. Ashish Agarwal.
Well, we'll go back to where Vodafone, the FPO actually lists and what we make, whether we see a premium there at the listing. We'll get you all those details. But let's also get going and discuss other stocks that will be in focus and what are the strategy you should be looking at getting into the May series. And joining me for that is Chandan Taparia. He's the Senior Vice President at Technical and Derivatives at Motilal Oswal. Good morning, Chandan. Good to have you with us on the show. Chandan, yesterday, if you have to look at trade, and I'm really looking specifically at the broader markets right now, because could we say, things have changed from what we saw in March and that meltdown after the stress tests and the likes. Are we seeing, the mid-cap, small-cap index really registering lifetime highs yesterday? In fact, the NSE small-cap actually did see that. Are we saying that, people are looking and seeing the broader indices more confident at this point?
Good morning, Stacy. Thanks for having me. So if you look at the broader market first, the Nifty has been moving in a range from last couple of weeks. But the important part is every small decline is being bought. If you have noticed just 2 days back that India VIX, the volatility index itself corrected by 20%, and VIX is at multiple months, multiple quarters low level. So lower VIX clearly indicates that declines could be bought. Bulls are having dominance in the market. But the concern is at lower VIX, we are not expecting the bigger spike in the market. So that's why indices per se, we have to go with buy on decline stance. We believe that 22,000 and 22,222 could act as two key level, and slow and steady we can head towards higher zone in the market. But yes, I'm totally agree with the view that mid cap and small caps are doing well. We have noticed that market has been moving in a range from last 2-3 days, but good momentum is clearly visible in the selective sector, especially if you talk about defense, shipping, railway, even mid-cap power and energy, fertilizers. So I believe that stock specific action is likely to be more in the market compared to the movement in the Nifty and the Bank Nifty. And yes, overall trend setup is clearly positive. Slow and steady, we are all set to head towards the new high territory in the broader market. Talking about the rollover data, that is comparatively in line. Expiry on expiry basis, we are slightly higher, but the good part is base of the index is shifting higher, which indicates that momentum could continue. Apart from defense and railway, exchange and broking related counter already have seen good momentum. So one has to focus on these stock specific action in the market rather than only talking about the index. And I think these stocks and sector can generate alpha at the current scenario.
Right. What about the Bank Nifty, Chandan? And because that one, we saw it, now it's poised about that 48,000 levels. Do you think there could be, especially because there's so much of action around stocks, if you're talking about Kotak Bank and what we'll be speaking in detail about that, but the Bank Nifty, do you think it right now it could be a little cautious play at this point?
Again, I believe some sort of range bound move could be there. We witness a corrective move, but again, some sort of bottom process notice or just 3-4 days back. Follow-up is missing, but supports could be there. So I'll go with buy on decline stance. If Bank Nifty comes near 47,500, 47,777, then again some stability could be there. So I'll go with selective range bound bias with buy on decline stance in the broader market, whether you talk about Nifty or Bank Nifty.
So what are the levels you would say for the Bank Nifty then, if one is to look at the charts?
Yeah, so I'll look at support at 47,250 for an upside move towards 48,500 zone.
Right, so you're still above that 48,000 levels itself. Okay, let's talk about stocks specific and especially to do with the banking index, because there's quite a bit happening there. We did see the results from Axis Bank yesterday, which was quite strong, we would say. Today you have IndusInd Bank, you also have the likes of a Bajaj Finance from the NBFC space, and more importantly you have all that has happened with Kotak Mahindra Bank. Now what has really happened? We had the Reserve Bank of India yesterday bar Kotak Mahindra Bank from onboarding any new customers through its online and mobile banking channels. They've also said that they will not be able to issue any fresh credit cards, this citing some supervisory concerns over its technology platform. Now the action has been followed after RBI has examined the bank's IT system over the last 2 years and the bank's continued failure to address these concerns. Now, the ban will also not impact, though, what analysts are saying, the customers, that they are existing customers, and Kotak can continue to provide its services to them, including its credit card customers. So what happens is only there won't be new onboarding of customers. Now, what analysts are also saying is that today perhaps you're going to see a gap down start, because there will be that knee-jerk reaction to this. But how much did it really change for the company? That's what, pretty much everyone is in line with the fact that it will see some, the stock might see some reaction, but the stock has been trading well, you can see there on your screens Kumar Mangalam Birla and the management of Vodafone ringing that bell at, for opening bell at NSE there, the FPO that hits floors today. So, on your screens there, Kumar Mangalam Birla at the Vodafone Idea FPO, 18,000 crores is what they're looking to raise. And we will see whether people have got those allotments.
Well, a big congratulations
at
to
that
Vodafone
floor
Idea
price
Limited.
of
Equity shares post the FPO. This is a significant milestone for the company. And here's wishing everyone a huge round of congratulations. We are grateful to our host NSE, the book running lead managers to the issue, our members of the board, our family and friends, well-wishers, importantly our shareholders. All of you who took time out to celebrate this occasion with us. Thank you once again. And I request the gentlemen to please stay on stage as I now invite a few more to form part of the family for the photographs. May I now invite MD CEO Axis Capital, Mr. Atul Mehra, Mr. Ashish Agarwal, Country Head India Jeffries, Mr. Virendra Bansal, Mr. Yash Ashar, Mr. Varun Chandra, Mr. Hare Krishna Ashar, Mr. Kishore Thakkar, Mr. Nilangshu Katriyar, Mr. Suresh Surana, Mr. Umesh Ved, Mr. Rajesh Chaturvedi, Mr. GVA Srinivas Murthy. Let me get out of.
Where there you can see on your screens, it was the Vodafone Idea FPO that has debuted on the bourses. But let's also address a market open now. Nifty 50 seeing that muted start, we would say 0.2% of pressure, but below that 22,400 levels where it managed to close to yesterday. So we are sitting below that to 22,400. The sensex also seeing some little bit of pressure there, about 200 points lower. 73,600 is where we're trading. The mid cap and small cap indices though have been holding out, and that's what we were talking about, how the broader indices is really the ones pushing, we would say, or seeing that kind of positive momentum amongst, even whenever there is a profit booking that takes place in the benchmark indices. So both the broader indices there in the green. Bank Nifty also come down below that 48,000 levels, almost close to 0.5% of losses that the Bank Nifty is seeing. So IT pack though is holding out there. You're seeing just about flat trade, we would say, but the Nifty IT index, remember TCS as well as LTI Mindtree were among your top losers in trade yesterday. So today some bit of positive action there. The pharma index also sitting quite positively there in the green. So you're seeing some action coming in there, whereas the FMCG pack definitely reacting to a couple of numbers. You had HUL, you have Nestle today. So earnings action really putting that pressure, we would say, on the FMCG as well as consumption baskets at this point. So both those indices are out and about in the red today. Whereas the metal index, that one also seeing some bit of pressure this morning, otherwise always holding out. We would say yesterday it was among your top gainers as well. So the Nifty metal index seeing some pressure there. Auto index, however, is holding out. So some good traction coming in there from the automakers as well as ancillaries. So you have your Nifty auto index that is in the positive. Let's also address the stocks that are really making the moves there. Axis Bank among your top gainers. You have Eicher Motors as well as HCL Tech. So different baskets coming in there. BPCL, Tata Motors as well as Divi's Lab. ITC, quite interesting, and we'll be talking about that because they've gone on to put out the date of when the board is going to meet for that demerger plans. That is going to be on June 6th. So ITC there among your gainers. Power Grid as well as Nestle ahead of that earnings. You're seeing them in the positive. Of course, on your losers list, you do have Kotak Mahindra Bank there right on top. Titan as well as HUL post those numbers. Also on the laggard list there, all of those, definitely reacting to the news flow that has come for these companies. But like we were talking about Kotak Mahindra Bank, and let me get Chandan back to ask him how one should be looking at this stock. Is this just a knee-jerk reaction to the news flow that has come in, or do you think broadly also Kotak Mahindra Bank, at least the stock has been stuck in that range, and every time it does see a rally, it manages to somehow again circle down to the same level? So how would you be looking at Kotak at this point, and what should be the strategy?
So Kotak has nature to be in a broader range. Whenever we witness recovery, somehow it faces absence of follow-on buying. It was moving in a range, but failed to hold and surpass the breakout, drifted lower. So that is the nature, and I believe as of now avoid till it remains below 1720 zone. Bounce could be sold. It can go down to 1620 to 1600. I think this is the counter. Because of that, the index is finding some pressure. So I think some more weakness could be there. If you ask me other name in banking, then I think Axis Bank and HDFC Bank or SBI could find some support-based buying to provide some stability to Bank Nifty compared to the decline of Kotak Bank.
Right, so that's Kotak Bank. But let me also broaden this, discussion, and let me bring on board Anshul Sehgal now joining us. Anshul, how are you really looking at this whole banking space per se? Because we've seen, be it the NBFC space today, we are expecting Bajaj Finance to come out with its numbers, and that stock has seen quite some swings. Then you have the likes of what has happened with Kotak Bank now, with RBI saying that they cannot onboard any new customers or issue credit cards to customers. Do you think one should be really cautious of the banking space, because those were the ones that actually managed to overthrow and start performing in in the rally? So should one just be wait and watch player right now when it comes to the banking space?
Good morning, Stacy. Pleasure to be amongst you. There are two aspects to this one should think of. One is, of course, the regulatory aspect that you alluded to, which is in the context of what happened to Kotak yesterday. And the other is in the context of growth that the banking sector is seeing, and what is the outlook of that growth going forward. Now, if you look at the last 2 to 3 years, broadly 2 years, maybe 7 to 8 quarters, you will notice that that credit within the banking system has grown to about 15% after a really long period of time, nearly a 6 to 7 year period, where we witnessed a single-digit credit growth in the banking system. And that has accelerated to about 15% now. And if you further drill down, you will notice that while retail, agri, SME credit is growing at over 15%, But corporate credit has been kind of a laggard, growing in single digits still, between 5 and 10%. And that's largely because there is a slight weakness in capex addition within the corporate sector, the private corporate sector so far. We anticipate that going forward, going into the next year, a private corporate capex should pick up. And as a result, this weak leg of the banking credit system is likely to get tailwinds going forward and give further fillip to that 15% credit growth that the banking sector is seeing. So in terms of demand uptake tailwinds on growth, we think that the banking sector is very nicely poised. Of course, there are issues on deposit accretion. Those issues will also be over a period of time addressed. And in general, this space trades at a very attractive valuation as compared to the rest of the market. I don't recall when last, in the last 10 years, HDFC Bank was trading at 12 or 13 times forward price to earnings ratio to under 2.5 times price to book. Now, this is, bear in mind, this is a bank which used to trade at nearly 4 times price to book. And it has come down to that kind of a level in terms of valuations. Also, some of the PSU banks, if you look at them, they trade at 5 to 10 times price to earnings. Still, after such a large rally, they're trading at around 1 time price to book. These don't seem stretched valuations. And if growth comes in with these valuations on hand, it does look like this space has, nice things to come going forward in terms of value creation for shareholders. So we remain buoyant on this space. Of course, it will have to be a stock by stock sort of view that one will have to take on the space. But by and large, this is an attractive space to be in over the next few years.
Right, and since we're talking about the banking space, you are seeing that reaction coming in for Kotak Bank. They're locked down. But let's also speak about Axis Bank, which came out with its Q4 numbers. Quite a good set of numbers, we would say, where the net interest income as well as the profits both have beaten estimates. Profit coming in at 7,130 crore rupees. The asset quality too has improved quite nicely. The NPAs are the lowest seen in nearly 3 years. Net interest margin, now that's one factor that we've been looking out for when it comes to these banks, and the margin too has seen a slight improvement versus that expectation of a decline that we were seeing. Now net NPAs are up though just by about 5 basis points, coming in at 4.06% this on a Q-on-Q basis. Now this is the first time in 9 years that we're seeing Axis Bank's return on asset really touch that 2% mark, whereas a return on equity is crossing that 20% mark. So quite interesting to see how it's really reacting. You saw that positive boost or thumbs up that it is getting from the street as well. But let me go back to Chandan then and ask him about, because it is such a stock and earnings heavy day today, Chandan, how should one be looking at Nestle? And there are a couple of queries also that have come in through this. We saw HUL yesterday come out with an in-line set of numbers, we would say. Before that, we did see Tata Consumers, which had a mixed bag. But Nestle, and especially after all the news flow that we're seeing with, that sugar in the baby formula and the rest, they have gone on to clarify. Even yesterday, HUL clarified that they're no longer calling Horlicks health drink, so they've changed the name there as well. How should one be reading Nestle today? In just before its results, we did see it have some positive traction there, but what would be your take?
So if I look at the Nestle, it has been consolidating a range. Just a couple of days back, it took support near 2400 and slightly moving upwards. So not expecting bigger movement, but yes, some positive to range bound bias is there. So the way it has taken support at 2400, now higher base is seen at 2450, and with that it can head towards 2580 to 2600.
Right, I'm quickly going to pull in another query there for Chandan. Vignesh N is asking if your view on Happiest Mind and whether you should keep a target of about 1,000, as there is also news flow on this counter. They have said that they're going to acquire PureSoft. This acquisition news just coming up right about. But what would be your view on Happiest Minds and how should one be trading that one?
So most of the IT stocks are not performing in the recent past, and all these stocks are finding absence of buying interest. But if you comparatively look at Happiest Mind, the stock started to hold the higher zone, Multiple supports are visible at 795, 800, and with this support slow and steady, it can head towards 860, 880 levels.
Right. Let me go back to Anshul. Then Anshul, how is one to be looking at this whole infra space? Now we've seen a lot of, especially if you look at PSU, PSUs within that space, be it Coal India or be it SAIL and the likes. We've seen the stocks really reacting quite differently, but the interest from traders or even from long-time investors still sticking out. So, do you think there is more that these kind of players can actually give in terms of stock returns?
Stacy, this is an interesting space to look at in our judgment. There are, of course, stock-specific triggers which could unlock value, but overall, there is a general thrust that the country is seeing towards infra development. And that means the pie for growth is available for the sector in general. I mean, what we've seen in recent times is that the power sector has seen, which had seen limited investments over the last many years. That space has not caught up with demand. And as a result, there were shortages on power or expected shortages on power. And that led to, interest going up in the power sector. And we've seen what happened with the stocks in that space. We believe that there is one such play in the road space as well, which is that over the last many years, road companies had gone into acquisition of assets. They were companies which were known for building roads and giving it back to the developer. But in this case, they went into acquiring roads. So their balance sheets inflated and debt went up. And that led to their earnings coming down and also investor interest waning. What has happened of late is that most of these road companies are going out and divesting their road assets, which is making their balance sheets lean. But that is not yet gotten reflected in their valuations. Valuations are still quite undemanding. Also, if you look at pure EPC plays, their ROE profiles are far better than asset owners. That again is not reflected in valuations. So we think that the road players will see significant uptick in valuations over a period of time. And also many other infra plays will witness similar sort of tailwinds, whether it is railways or it is power or even building construction companies. There will be enhanced interest going forward. Bear in mind that the big joker in the pack is whether the establishment continues, the current government continues going forward. If that is to change, then of course the whole outlook for capex as also infra development will change going forward.
Right. So that's the view on infra space, and since we're talking about that, there was also Dalmia Bharat that came out with its Q4 numbers yesterday. We are going to see ACC put out its numbers today. So from the cement space, let me just go through the numbers of Dalmia Bharat for you. Well, it did record a consolidated net profit of 320 crore rupees, but this has fallen quite sharply by about 47.4%. So compared to the same period last year. So you're seeing that weak operating numbers also really play out. This also because the base in the Q4 of FY23 was quite high due to their share in the profit in association with their joint venture, and which is why you're seeing that huge drop in its profits. Revenue from operations though have grown by about 10%, coming in at 4,307 crore rupees. Volume have also grown by about 18.5%. Anshul, quickly, because you spoke about infra, cement space, is that still interesting? Are there some positives or tailwinds that could really take from the cement space, and names that you would like from here?
Stacy, cement, of course, is going to be a big play if infrastructure and construction is going to pick up. We will see, of course, as we all know that, in the cement space, it's a very regional sort of, operations and financial dynamics that this sector sees. You have, many times the South region doing well, which is the case today, and other regions not doing so well. In terms of pricing, tailwinds, other regions may be doing well and South may not be. So that kind of a dynamic works in cement. So you'll have to choose your segment very well, which stock to buy into. That also will have to take a lot more sort of calculation from your side before going in. But it's suffice to say, for people who are not so well versed with this space, it's best to go with national large players and look at those companies because they're present across the country and they will benefit from trends in various regions, irrespective of whether another region is doing well or not. And as a result, our belief is that there will be tailwinds in this space going forward. The larger players will be big beneficiaries, and that's where the small investor should, if he so chooses to be in this space, should be focusing his energies.
Right.
This is of course for the long term a good sector to look at.
Right. So quite a tricky play actually cement is over time, especially because when you look at raw material costs and how that really goes on to impact it. But you could take that view from a long term perspective. The bigger names could really hold out. Let's also look at other stocks that are in action today. Delivery. Now this one quite interestingly, a foreign institutional investor like Canada's Pension Plan Investment Board is likely to sell about a 2 lakh worth of equity shares in this company. This could be via block deal is what we're picking up. The share is equivalent to almost 2.77% of their paid up equity in this logistics company. The average price for the sale is somewhere around 444.3 rupees per share. This valuing this whole stake sale then at about 908.6 crore. Remember, the Canada Pension Board really holds by about 5.96% stake in Delivery, and it is the smaller cap World Fund Inc. This one is perhaps going to be one of the buyers buying close to more than 1 crore worth of shares that could be picked up. This equivalent to about 1.87% of that paid up equity in the company. So interesting to see how Delivery reacting to that. You're seeing that counter in the positive. But Chandan, let's bring Chandan back on and ask him how we to be looking at the stock. Of course, it is reacting to the news flow, but new age tech stocks, just before earnings, we normally see them, see quite a bit of pressure. How should one be looking at stocks like Delivery?
So it got stuck in a range, but yes, support-based buying is clearly visible. I require a follow-up buying beyond 464, 465, then only the fresh leg of rally. But as of now, one can trade the trading band between 435 to 465, 470.
That's the view on Delivery. Let me also ask Chandan on ITC because that one's quite interesting. And like I was mentioning before, they have the board will be coming out and they will be meeting on June 6th to decide on the demerger plans. And this has been something that everyone has been in that wait and watch mode to see how and what they're going to get out of ITC. So Chandan, how should one be playing ITC? In fact, we have a query asking whether one should accumulate more of ITC's shares at this current level, especially if there is more that can come out from the demerger plan.
So I believe some sort of range bound bias could be there. However, decline could be both. One can accumulate if looking for some sort of stable return. So as of now, 415 is the support. It can slow and steady head towards 460 marks.
Right, so that could be your plan. I hope that answers your query. But Anshul, back to you. How is, we are looking at IT companies come out with their numbers pretty much because we've already factored in that, it was supposed to be a lower spends. The Fed, everyone was waiting and watching to see how with the Fed, whether we are going to see those 3 rate cuts or whether that is, going to be put by. How much does that change for IT companies here in India? And do you think one should be looking at the larger cap IT players or whether it should be the smaller ones that are actually holding out?
Stacy, let me just step back and give you a nice adage, which I recently read. Skill is playing the game well. Wisdom is knowing which game to play. Now, we don't have to be in all the segments of the market. We don't have to be in all the sectors. Within a sector, we don't have to be in all the companies or don't have to look at the entire space closely. You referred to the IT space. If you look at how the last 10 years valuations of IT sector have been and compare that to current valuations, even though this space hasn't done very well in recent times, the large caps particularly, you will notice that even at these valuations, despite the sector not doing so well, this space is highly trading at a higher premium to the last 10 years average in terms of valuations. So clearly, expectations built into this sector are still elevated despite the sector not having done well. That doesn't mean that there aren't opportunities in IT. That doesn't mean that there are certain names which are undervalued and cannot be looked at this time. Surely they can be looked at. But this is not a sector that I would say that one should, go all out and get into, because I do see still premiums in valuations. Also, I must say that, here one has to be very stock specific in this sector. There are certain plays which will be attractive where I do think that over the next 3-5 years, there are enhanced tailwinds on demand. And if one can pick those names, clearly there will be opportunities here. But one will have to be very selective. Of course, downsides will be protected here because these are plays where cash flows are strong, ROEs are strong, cash balances on the balance sheets are strong. And so in case of market volatility, downside will be limited. But if you're someone who's playing for the next 3-5 years, the India story and growth in India, then clearly, in my judgment, this is a space which will be a laggard. There are better plays within the broader markets where one can go out and look for opportunities. I'm saying broadly, of course, there will be the odd opportunity within the IT space where you will make more money than the markets. But broadly, this is a space which still looks not, attractively valued.
Right. So IT is still maybe not out of the woods yet, we could say. Chandan, last word from you. What stocks are you recommending for our viewers? I'm assuming this would be for the May series. So what's really on your radar?
Hindustan Aeronautics Limited, we are positive on most of. So HAL one can buy with support of 3900. It can head towards 4200 zone. We are continuously recommending the same, and we have positive view and expecting most of the defense counter to do well, including HAL, BDL, BL, MTAR, take Paras Defense. Apart from HAL, Concor is one counter where we have positive setup. It has given a consolidation breakout. Technically, it given a breakout of cup and handle pattern, which is bullish implication. So with support of 955, one can see an upside move towards 1020 kind of level. So positive view on defense, positive on the Concor. And apart from that, metal counters are likely to do well. Hindalco one can see for an upside move towards 645, can buy with support of 620.
Right. So for Chandan, it's going to be from the defense space as well as the metal space. Anshul, last word from you. We are, you can say in the bang middle of the earnings season, Q4 FY25. Do you think it would be a disappointing quarter from what we've seen so far? At least the banks have shown some bit of resilience. IT, continuing to be that drag, but heavyweights like Reliance or HUL coming pretty much in line with what was it, the streets were penciling in. So how would you be rating the Q4 earnings season so far?
So far, it's been a mixed bag, Stacy. There are certain companies which have shown very strong numbers. Like you rightly said, in the banking sector, we've seen strong numbers. IT, it has been a mixed bag. Some companies have done in line with expectations, others haven't. Just yesterday, the FMCG bellwether HUL reported, and again, there wasn't much excitement in the numbers. It looks like consumption patterns are still weak, particularly in the rural part of the country, rural and tier 2 cities within the country. But that again offers us an opportunity because going forward, if this space is to pick up in demand, and it's likely that we are at the fag end of demand patterns being weak in the rural and tier 2 segment of the economy, then stocks have really been laggards in this space, and we could have opportunity there. going forward in the next, say, 3 to 4 quarters. This quarter should be a mixed bag. But I'm particularly in certain segments of the market. If you were to speak with capital companies, manufacturing companies, you would notice that most of these companies are indicating a 20 to 25% revenue growth over the next 2 to 3 years. So there is significant tailwind in growth. They're talking in terms of volumes, which tells you that that there is tailwinds in the economy. One quarter here and there really doesn't matter. As long as there is tailwind on growth, that will reflect in stock prices. There will, of course, be impact to stock prices if they don't deliver on earnings growth, because there is no room for error. But by and large, I would say that one should take a longer term perspective than worry about one quarter. If you're healthy in terms of growth for the next 2 to 3 years, then we are in a very good space in the Indian market.
Right. So still positive for the Indian markets overall. We are sitting quite, high there compared to the global peers also in terms of where our markets and what their returns have been. But let me thank Anshul Sehgal once again for giving us his perspective, and also Chandan Taparia for helping all of our viewers with their queries. But if we've not able to answer them, please don't be disheartened. Continue writing to us on our live feed, and we'll try and have them answered by our experts. But with this, it's a wrap and goodbye from the entire team that puts this piece together. Thanks so much for watching. Also, do post your feedback for us in the comment section and follow us in the link at the bottom of your screen for rest of the updates. Stay tuned to Money Control as well as the Money Control app.